This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 243 is brought to us by Bybit. You really have two choices. You can sit there and watch your crypto portfolio crash and just be forced to be okay with it, or you can take advantage of the fact that things are going down and make a lot of money off of it. That's what so many of my traders at Bybit are doing right now. I can see it on the back end. They're not doing much during the consolidation phase. You might even take a couple small losses here and there, but as soon as that big move hits to one side or the other, all of those small losses are immediately erased and the big gains start coming. And usually they happen again and again, as we've seen this time, as we've seen so many other times. Take advantage of this and take advantage of all the great benefits my affiliate link gives you as well. Go down to the show notes, click on the Bybit blog. It's always that very first one at the top. Read the blog, make sure it's for you, click my link and get started. And just know now and forever with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and I've only said this maybe a couple times in the history of this podcast, but this may end up, when we look back on it, 5-10 years from now, this might end up being one of my most important episodes, one of the biggest episodes, regardless of how many downloads it gets. Because even if you don't understand that crypto and the blockchain is the future of finance and payments and computing and all that, the smart money does know. And the big money is building, and has been, throughout this entire crypto crash. While people on X are freaking out and saying, oh my God, it can't go lower. And the next day they're like, oh my God, it did go lower. And people like you are allowing people like that to sway your own sentiment. Just know, the smart money and the big money, as usual, doesn't give a shit. They're building, and a lot of these companies are actually ending up on the major stock exchanges, which is a very good thing, by the way. Because as much as I personally like investing in tokens on the blockchain itself, primarily because, especially now, a lot of them are finite. We've had a whole episode on this, how there's a lot of tokens out there like XRP, like Chainlink, like Aave, that are actually finite, just like Bitcoin is. And I think this will matter someday. I have no idea how far into the future that's going to be. But I'm more than happy to load up now. But what's uniquely superior to these crypto companies on the major exchanges themselves is, we've always talked about how when we get this mass adoption, we need the really big money to be able to come in. These pension funds, these retirement accounts, boomer money, Gen X money, all this type stuff. And a lot of them do not invest on the blockchain, and they probably never will. But they will invest in an actual crypto stock. And so by investing in one of these yourself, you can not only participate in the future of so many things, but you also get the added bonus of having the opportunity to have that big money come behind you, in the future. I mean, we front run Wall Street all the time on this show, Contrarians. Anybody who's been with me for even a few episodes, you already know this because you've seen it, and hopefully you've participated in it. But being able to front run big money is a big deal. And with these crypto and blockchain companies, not just in ETF form, but the companies themselves, more like the picks and shovels companies, getting on the major exchanges. There's just a level of trust here that does not exist on the blockchain because people just don't understand the blockchain yet. I mean, more do now than they ever have before, but it's percentage-wise, it's still not even a quarter of the investable public really understands it and or chooses to invest there. And then investment advisors, they can't recommend it to their clients. You're not going to recommend retirees and people with money take their money straight to the blockchain. I don't know if legally you can do that in the United States as a fiduciary. I'm not sure. But I do know they're not doing it. But they're more than happy, if they believe in the sector, to recommend all this big money flood in to stocks like the ones we're talking about today. Now, you might be sitting there thinking, well, no, these investment advisors aren't going to recommend these crypto stocks to retirees and their big money clients. Well, one, that's not true in many cases. The money flow certainly say otherwise. And two, we don't invest for the right now. We invest for the future. That's why we front run everybody else. So once these things, if they do, and I believe they are going to, become the next internet stocks, they will be the primary vehicles for what investment advisors recommend to their clients. Just like back in the early 2000s, you would never, it would be horrendously irresponsible to recommend companies like Amazon, Microsoft, Google, Facebook to your clients. But not even 3 to 5 years later, they were recommending them to everybody. I need you guys to understand this and wrap your heads around this concept. Now, if you don't think that crypto and blockchain is going to be the new internet, then maybe avoid this episode. I get it. Maybe you think it's going to be AI instead. To me, I'm not sure why it always has to be either or. I think there's going to be a lot of synergy between the two, a lot of collaboration, and I'm bullish on both. But as of right now, crypto and blockchain is a much more mature sector than AI is. And I have a lot more data in front of me, which is good because, as you guys know, I want to invest in the best of breed at stupid cheap prices, if I can. And what's great about the blockchain is it allows me to do that over and over. But we are also getting that opportunity here as well. Again, we shouldn't. This is all sweet divergence, which means when prices fall, even though fundamentals have remained exactly the same, we really, really like that here. That is a gift. And every time we don't pull the trigger when something like this happens, we end up regretting it. So what will you do? Now, I will say that this episode is going to be dedicated to the sweet divergence plays, because in every one of these stocks I'm about to name, price has dropped, in some cases, a lot. And these stocks are well off their highs. In a lot of cases, highs that happened in 2025. Now, given the fact that we saw new highs not even that long ago, and this whole drop in the crypto market hasn't even been a fundamental drop. It was more of a liquidity squeeze and a de-risking cycle more than anything. We are getting prices we really shouldn't be getting. And so we're going to dedicate this episode to those. Now, there are other plays on the board that fit the sour divergence category, to where price dropped for a lot of these stocks, but certain stocks didn't have their prices drop hardly at all, and in some cases actually went up, even though they are crypto-based stocks. That says a lot too. And what I might do is put those in the Substack blog, which you're going to want to subscribe to if you haven't already. It is free. The link is down below in the show notes. And I've said it before, you're probably getting just as much alpha there as you're getting here. I just came out with a blog called Better Money, talking about how I have pivoted in my methodology towards things like gold, silver, and Bitcoin. Some people are a bit confused by it. When I talk about it here on the podcast, I clarified my stance there so it's crystal clear to everybody now that I take a bit of a different approach with things like that compared to stocks like this. But now that I've said all that, without further ado, let's go ahead and get to these stocks. I have quite a few on the list. Now, these aren't stocks I'm buying right now. These are stocks that are on my radar heavily, and I do believe, not financial advice, don't do anything I say, they should be on yours as well. And the more groans I get from mentioning these stocks, then the better I feel about them. Because when even my contrarian audience disagrees with me en masse, that generally means I'm on the right track. That means I've found some real deep value. Because also, as we spoke about in last week's episode, the majority of you, I guarantee, still allow negative current sentiment to affect you way too much. That's another essential episode if you haven't heard it before. But moving on. So what's great about a lot of these is these are the best of breed stocks right now. And with these two, we've had some real time for the cream to rise to the top here. And, I'm sure there's going to be other companies that come in and disrupt everything, and that's fine. And they're also going to be good investments, but so will the incumbents. And what's great about these early versions too is these will likely be many of the stocks which will end up in future crypto ETFs. Right now, a lot of the ETFs are very Bitcoin, Ethereum heavy, or have to do with a particular token on the blockchain, but you can now invest in them on the major exchanges, which I think is a big thing, by the way. There's some of these ETFs that don't have a whole lot of money coming through them yet. Doesn't matter. The fact that they can at least have big money off the blockchain itself come into it, I think is tremendous. But what's going to be even better is when they start packaging a lot of these things into an ETF that most people can understand and they're going to feel safer with. And if you can get those individual stocks now before they end up in the ETFs, this is yet another way to front run everybody else. And this is a very unique opportunity we have. Now, there's one more thing I want to say before I get into the individual stocks themselves. There is another blog post on the Substack blog called Pot Odds. I want everybody to be very familiar with that because there's going to be a lot of names I'm going to read off to you, and you're going to be pretty soured on them. You're going to be like, no, I don't think that one has an above average chance to succeed. Well, here's the great part, and this is going to be a little bit uncomfortable to some of you, but if you understand basic math, and even I understand basic math, there comes a certain time, place, and in particular a price to where your idea or your thought if this thing is going to make it or not kind of stops mattering. All right, let's say there's a stock that sells for $5 a share. And I'm like, do you give that an above average or below average chance of succeeding? And you say, I'm going to give it a below average chance. And then I would come back to you and say, all right, well, now that $5 stock is at $2, and it didn't even get down there for a very good reason. Are you interested now? You might say yes. You might also say no. And then I would come back and say, okay, now it's at 75 cents. You may not think it has an above average chance of succeeding, but do you at least think it has like a 25 to 30% chance of succeeding? Because if you do, by basic mathematical principles, this stock has all of a sudden become a screaming buy. So, for example, if you're on the fence about it at $5 and it goes down to $2 and it didn't even miss earnings or get sued or have a regulation change anywhere, you should probably start to like it. If you don't, that means you are probably more emotional than analytical. And I don't think that's a really great place to be, at least not here. So just remember that as we go. Every one of these stocks has gone down a lot in price, but has not gone down in value, in my opinion. All right, so let's kick it off. First one is a stock we've dedicated an entire episode to. You can look this up on your podcast player or on YouTube. It's probably not even 2 months ago when I did this, and that's going to be Coinbase. Because price just keeps dropping. I'm recording this on Friday, and price has gone up like 17%. I guess it's because the CPI number we had today, I don't know. But it's still overall down a lot, and has gone down even more since I put that episode out. And there's no reason for it. It is still the 8th largest bank in the world. You have to also think, remember, we invest for the future here. Generation Z, Generation Alpha, are likely going to have very little interest in banking at places like JP Morgan Chase and Barclays and HSBC. And this whole ratio, these scales, are going to constantly start tilting away from these older institutions and into these newer ones. And again, with Coinbase, we're not talking about some upstart here. We're talking about the overall best-of-breed leader in this space by far. And the price just continues to drop for no reason. And we just got some extra negative sentiment this week about some people not being able to deposit, withdraw on Coinbase. I've heard news like this so many times in the last 10 years, and it really ends up being nothing in the end. People act like it's a big deal at the time, but it passes and everybody forgets about it. So I love seeing negative sentiment like this because it just drives price down even further, even though it's such a temporary nothing burger 10 out of 10 times. If anything, it's good because it allows companies like Coinbase to fix problems they may have been unaware of before. So I think your average ding-dong sees news like this and looks at it as a negative. I absolutely don't. I see it as a positive from I can't think of the word, a being able to fix it standpoint. And also, I'm just getting even more sweet divergence when things like this happen. But since I've already done a dedicated episode to Coinbase, I'm not going to speak too much more about it here. Please go check that episode out if you want. It was a good little deep dive I did. I think the episode was called The Next Big Bank or something like that. But we will move on. Now, I've mentioned this one in the past too. I've mentioned a few of these on the Discord forum. And you can get there by going to nononsenseforex.com/FAQ. The invite link is there. Now, the future of Discord is a bit up in the air right now because they're requiring a lot of really crazy privacy measures just to be a part of Discord, all because they have just done a really bad job of managing spam bots and scammers and things like that, so they're going to take it out on us. But I digress. Let's hope that passes as well. But one of the stocks I had mentioned there, and I'm extremely bullish on this one, is Circle, ticker symbol CRCL. I've said in the past, man, if the best business in the world right now, the most profitable business in the world right now, does anybody know? It's not even close. It's Tether. And I'm like, man, unfortunately, there is no way to invest in Tether itself. If I could, my God, take all of my money. Like all of it. Like I don't know like how much my plasma or my sperm would go for in Latin America, but I would find out because I would be offloading money into Tether. But can't worry about things that we can't do anything about. But what I can do something about is my ability to invest in the second largest stablecoin company out there that actually does a lot more than just that. And also, you might be thinking there's this huge drop-off from Tether down to USDC because that's what you see on CoinMarketCap. But check out this stat. I was blown away. Stop what you're doing and listen to this. Multiple sources, including Bloomberg citing Artemis Analytics, report $33 trillion in total stablecoin transaction volume for 2025. This is up 72% year over year. Now, you ready for the kicker? USDC led with 18.3 trillion, ahead of USDT's, Tether's, 13.3 trillion. USDC beat Tether by $5 trillion, trillion with a T, in 2025. And you're telling me I get to invest in the company behind it at a deep discount? Excuse me? I mean, go look at Circle's chart. It's a bloodbath. It hit a high, again, last year of $300, and you can get it for $60 right now, 5 times off the highs. You can get it lower than the IPO price, which if you ever get salty because you don't get to participate in IPOs or ICOs, but you can get the same thing for lower than what those people paid for it, it's kind of a nice feeling, isn't it? And your average person just thinks they're investing in the company behind USDC and nothing else. Circle does so many more things. They have the top Euro stablecoin. They have a yield-bearing stablecoin out now. I'm not sure how it's going to compete with Tether's, but it is out. They also have something called the Circle Payments Network, which is, again, we all know that blockchain is a superior payment route than what we have right now. It's the reason why your banks, your clearinghouses, your old school payment platforms are freaking out over this technology because they know and they can't compete. The CPN, what Circle has, is a cross-border payments network that can integrate just about anything much faster, much cheaper. And at the end of the day, if you can give the world that, the world will respond. There's a reason why Western Union's almost dead. Remittances and cross-border payments are a big deal. And currently, there are just better ways to do it. And people will respond. So I don't know what's going to come of CPN, but I know it's out there. And it's backed by a pretty big, well-capitalized, well-run company. And oh, by the way, if you like Coinbase, you should probably like Circle too because they are connected at the hip. That's probably the reason why they outdid Tether this year is because that's the token you use on Coinbase. Again, if once this stock hit $300 and you were like, nah, not interested, how would you feel about it now? The whole world knows stable coins are the future. It's not a maybe anymore. Like everybody's agreed, yeah, this is not only it's way better. And you can actually invest in them now. If I just told you that, that should be enough. But with Circle, there's just so much more there. I will be a holder of Circle at some point. You guys know I took the investable cash I had and spent it on tech resources, ticker symbol TECK. So once I get that next tranche loaded up, whenever that is, Circle is going to be at the top of my list. And you could even split the baby between them and Coinbase if you wanted to. Go half Coinbase and half Circle. I wouldn't blame you for it. But let's go ahead and keep things moving here. Now, I would have recommended this one even higher, but price just hasn't dropped as much. Price has dropped a lot, as is going to be the case with all of these, but just not, bargain basement prices like the last two. But that's going to be Robinhood, that ticker symbol HOOD. Again, we have to go back to the whole idea that kids, or really anybody from a teenager to even a college kid on down, may never even own a leather wallet. Like, the world changes, technology changes. And I am looking for established companies that these younger generations are still going to flock to. And I think Robinhood does such a fantastic job, not just in the crypto space, but in the everything space. I mean, kids just aren't going to be completely uninterested in TradFi. A lot of that are things that you do grow into. And God, as a platform that's quick, easy, geared towards younger generations, yet appealing to Gen Xers as well. They've been able to do just really great creative things in the crypto space. They have probably the best credit card in the United States right now. Now, not everybody can get it, but it gives you 3% cash back, which is impossible for any of the big banks to do, but Robinhood can because of the agility they have with their crypto products. I know they had issues years ago, but a lot of new companies are going to have issues like that. The big question is how do they come out of it? Did they? And when they did they minimize collateral damage? Yes. And they're still able to move forward the way they are? Yeah? Okay, well, then just like we spoke about with Coinbase, this is a good thing. Do you want a company who's already made their mistakes, or their biggest ones, or somebody who is still about to make their biggest mistakes? I think that choice is pretty easy. Again, remember the title, Generational Crypto Stocks. While Robinhood isn't necessarily pure crypto, I do believe it is generational. And you are getting it at a very discounted price right now. So I think it belongs on your radar as well. Because just like all three of these stocks, Coinbase, Circle, Robinhood, big money has already shown they are willing to invest in these stocks. That's the reason why they ran up in the first place. And it's crazy to think that they won't hit those 2025 highs again at some point in the future, if not this year. Just depends on the type of cycle we get, right? All right, so where should I go next? All right, before we get to this other class, I want to throw a little bit of a wild card in there. This is a company that a lot of people are very soured on. And I don't know if they necessarily should be, because there is still a lot there. And again, at a certain price, it just becomes way too tempting. And the stock I am referring to is PayPal, ticker symbol PYPL. Now, PayPal officially began their descent back in 2021, right about the same time when they declared that if anybody was caught producing what they called back then misinformation, which turned out to be the truth, about certain things that were going on back in 2020 and 2021, that they would actually be able to go into your bank account and take a fine out of it, which, one, I could not believe was even legal. But apparently they said it was going to happen. Now, right when I heard this news, I immediately unattached my Chase account from PayPal and attached my Wells Fargo account with nothing in it to PayPal. And I'm like, hey, good luck, assholes, because I am a content creator who does speak my opinion at times. But like I said, because God does exist, the price of PayPal immediately started going down right after this proclamation and really hasn't stopped. Like, go look at the monthly chart of PYPL right now. I mean, that sucker is gruesome. The price is all the way down to like 2017 levels. Now, in that time, since 2021, they've made some acquisitions that haven't really panned out. I don't really want to get into all that because we still got a number of stocks to go here, but just know that has led to some of their demise as well. But at a certain point, you have to ask yourself, what do they actually have? What is still there? Are they still a major player in the payments space? Yeah, they're like at the top in terms of e-commerce and the way a lot of people still pay each other. Yeah. When I go out with friends and I pay for dinner because I want the points, they all pay me back via PayPal. Now, does it have the market share in this particular space that it had before? Well, no, but it still has a pretty good share of it. So it's still going to make money and revenue from this. And also, oh, by the way, the reason it's on this list is because they have gotten ahead of the crypto game with their own stablecoin, PYUSD, which is currently number 25 on CoinMarketCap, PayPal's stablecoin. Now, you guys know what I also like to do is take my paid and unpaid fundamental ratings agencies and see what they have to say about it. And if you take away momentum, because all the momentum is moving downwards right now, but that's fine. Again, we're not buying these, we're putting these on our radars. Unfortunately, they factor that into fundamentals, which I don't think they should. But if you take those aspects away, they're all generally quite bullish on PayPal at these prices. Like, I just don't think PayPal is going the way of the dodo here. A lot of people back in that kind of second generation of the internet were writing off companies like Intel and IBM and Dell Computers because they were kind of yesterday's news. But in many ways, that turned out to be a huge mistake because not only were they still quite relevant, they all did quite well and ended up moving up with the sector. Now, if your natural inclination is to push back and say, well, if I'm going to buy things that are just going to move up with the sector, shouldn't I buy companies that are going to be a bit more current, like companies that people are going to get more excited about now? And again, my response back to you would be, sure, good point, but at these prices, that matters, contrarians. If you look at one chart, out of anything I'm talking about in this episode, go look at PayPal's chart. And if you don't think there's value there, fine. But I certainly do. You don't just simply write off companies with that much already there at a depressed price. Go ahead and do it if you want, but I'm interested. Now, so we're getting kind of close to the 30-minute mark here. Believe it or not, I don't love it when these things go super long. So I'm just going to group all of these other ones together. And because we've already done an episode on these as well. You can go, and it wasn't long ago, you can go check that one out. And that's going to be on the digital asset treasuries. Because I think we understand now that these things are a problem. Like, banks know that they're a real problem. And if there's any negative, it's going to be that the banks are going to fight these things tooth and nail to the bitter end. What I'm talking about is companies like MicroStrategy, like Metaplanet, like Bitmine, companies that everybody's laughing at right now, in particular because of the crazy short-term mushy middle predictions that Michael Saylor and Tom Lee were making. God, Michael Saylor's getting fudded so bad right now. But that's great. That's bottom of the market behavior. Remember that. And again, I'm not saying buy now. I'm saying put it on your radar and let this whole thing play out. Let this whole bottoming cycle wash itself out and then see who's left standing and make your decisions then. But when you are able to take superior money, like Bitcoin, for example, and use it to provide superior yield, which these old, stodgy banks and brokerage platforms just simply cannot do ever without an extreme amount of risk behind it. Like, contrarians, I don't think you understand how much money is behind seeing who can get the most yield with the least amount of risk. And once these companies actually establish themselves as being able to do that consistently, and oh, by the way, MicroStrategy's preferred stock, ticker symbol STRC, the main one, the one that's supposed to give you 10% yield. So as we've seen this crash of sorts in the crypto market and in Bitcoin, STRC has not only remained at the exact same price, it is currently yielding 11.25%. So we always ask ourselves, and I always ask myself this question too. Okay, cool yield product you got there. How would it perform in a crash? So many of the yield products I look at right now that I really like have a lot of REITs attached to them. And that doesn't always sit well with me because I remember what REITs did back in 2008. And so I'm not really super keen on investing in these things or putting my money there for like 20, 30 years until I see an actual downturn in the housing market and the stock market overall. I want to see how those things perform during that time because those times are going to happen. And this is supposed to be the safest place in the world to put my money, or one of them at least. So I got to see how these things react. And look, I know this isn't the biggest sample size in the world, but a lot of people were concerned, okay, if Bitcoin crashes, what's STRC going to do? Well, again, with a small sample size, we have answered that question. For now, at least. It has passed that first test. So a lot of people are going to look at, the base company behind that, MicroStrategy, and say, well, that's just a leveraged play on Bitcoin. And it may still be for now. But what it is lining up to do is pretty revolutionary, and it looks like it might just have a chance of working. The mechanics look like that's going to be the case. And if MicroStrategy can do it, a lot of these other digital asset treasuries companies can do it as well. I am particularly interested in Metaplanet, ticker symbol MTPLF in the United States, because they are giving Japan a 5% yield, which is leaps and bounds over anything those poor people have ever gotten a chance to have before. We're talking the world's fourth largest economy here. If you can show stability on these things, how appealing is something like that going to be over the status quo? I mean, there'd be a line out the door. Now, again, maybe in your mind you can't see these things happening and you still have doubts about it. Okay, fine. But at these prices, have you checked out these charts? You need to. Because look, man, I know it all feels kind of weird because we're so early here, but we're just doing the same thing we've always done. We take sectors and subsectors, which are inevitable. Like there's no way they're not going to be able to take in the future because they're just so superior to what's already out there, right? So start there. Then you say, okay, what companies are involved? What vehicles are involved here? And then you find the best of breed, the ones who so far have shown that they have what it takes to rise to the top, with the right people and the right capital behind it. All right, so you take those two knowns, and then you take a third known, and that is, okay, we still know we're taking a bit of a risk here because it is very new. So let's mitigate that risk as much as we can by getting the absolute ridiculous prices possible. Then it's not even that much of a risk anymore. This is more or less the exact same playbook we have used to score big with so many times over with gold stocks, silver stocks, now copper stocks, uranium, lithium, Bitcoin, Ethereum, rare earths, contrarians. It's all the same playbook. The only time we have really taken losses and tripped up on this is when we made the mistake of investing in version 1.0 of something, such as carbon credits, such as metaverse. But we are not doing that here. These sectors and subsectors have a much, much higher probability of panning out. Now, maybe less so with the digital asset treasuries, but they should definitely be on your radar, even though they are going to be farther up the risk curve. The potential return there is so asymmetrical. I'm actually fine taking an L there. I'm not afraid to lose if the pot odds say I should win over time. If you're afraid to lose, put your money in bonds. We're not doing that over here. At least not yet. Someday we will. But if you're going to play in this pool and make the money we have made so far, you're just going to have to be a little bit crazy. and a little bit early.